Hi everyone. In this video, I'm going to go through a question and answer session that Microsoft management held with investors to try and answer what's going on with Microsoft stock. So let's get right into it. The first question comes from Keith Weiss from Morgan Stanley Research Division, and this was in the Q1 2023 fiscal conference call on October 25th. Keith asks, this is now 2 quarters in a row where Microsoft Azure, which is Microsoft's cloud segment, constant currency growth came in a little bit below your guidance. So management gave some revenue guidance and the actual results were below what management guided for, and the analyst wants to know why that's the case. And Microsoft CFO Amy Hood answers that I want to focus mostly on what and how we see the number, which is that it is still a very large growth rate with growth across all segments and with growth across all geographies. So what Amy is responding is don't pay so much attention on the lower than expected growth. Look more at the overall growth, which is still really high. Of course, management always wants to put, well, I shouldn't say always, but usually wants to put a positive spin on things. And this was Microsoft CFO's way of putting a positive spin on delivering lower than expected growth in the cloud segment. Moving on to the next question from Brent Thill from Jefferies, asking about, for the first time, management said there was some weakness in SMBs, which is small businesses. And again, the CFO jumps in to answer. I think that's a place where we can talk specifically about the small business market because we did see continued impact in the first quarter of 2023, although it was not different than what we saw in the fourth quarter of 2022. So, yes, there was some headwinds to small businesses in the first quarter of 2023, but it didn't get much worse from the fourth quarter of 2022. So, at least that trend is not worsening, is what Microsoft CFO is alluding to here. And the next question comes from Mark Murphy from JP Morgan Chase, asking about looking at an inflection in many of the AI breakthroughs, artificial intelligence, thinking of GitHub, Copilot, and the image generation and your designer product. What is enabling you to innovate so rapidly and essentially be the first to market? I wonder if it's the OpenAI relationship. And Microsoft CEO now jumping in, Satya Nadella, saying it's sort of important to call out that we built the super computing capability inside of Azure. He goes on to say, I think you'll see more advances on the GitHub Copilot, which is off to a fantastic start. But overall, this is an area of huge investment. The AI moment clearly has arrived and it's going to be part of every product. So, this is good news for Microsoft stock investors. The company is on the leading edge of artificial intelligence, which is growing rapidly. It's a fast growing industry. And the fact that Microsoft is innovating in this arena is great news for Microsoft stock investors in the long run. And the next question comes from Carl Kierstead from UBS, asking about profit margins. And the CFO jumping in here, Amy, saying the PC market is cyclical and we had some great benefits for a couple of years during the pandemic. We chose not to spend more against that favorability of the past couple of years, and it dropped to the bottom line, and you saw substantially increased profit margins over that time. So Amy is saying, let's take a step back here on profit margins. Let's go back to the boom that we experienced during the pandemic. When our sales exploded, we didn't spend very much more. And so that boost in sales created a boost in profits. But now, going on, she says, now PCs are going to be a tough headwind for us, right? That's understandable. People that bought computers at the early stages of the pandemic, these computers are probably going to be used for several years. So they're not going to come back to buy another computer. That means there's going to be a headwind in the PC market, which the CFO is confirming here. And now saying that, so in the same way that we let it fall to the bottom line when they saw a surge, it's important to stay consistent in this down market, because when you have the type of opportunity that we have, specifically in the consumer business and the total addressable market, we want to keep investing in growth. So the CFO is saying that we didn't increase costs during the pandemic when sales exploded, and at the same time, we're not going to reduce investment now that sales are coming back down. So what they're saying is that they're staying consistent throughout the cycle, throughout the ups and downs. They're staying consistent with their investments in key strategic categories. The next question comes from Bradley Seals from Bank of America, asking about office commercial products. A lot of growth here is driven by subscriber growth. This quarter, for example, 17%. And I think you're already at over 300 million subscribers. So Bradley wants to know a little bit more about the office commercial product. And the CFO jumping in again and saying, it really should continue in some ways because we're focusing on frontline worker scenarios. We're continuing to focus on small and mid-sized business growth, and we're adding new things to which you can grow, whether that's Viva, whether it's Microsoft Teams. There's new things that enable us to add relevancy, and then to add value, and then to add users. So good news here for Microsoft stock investors that the subscriber growth from the 365 product, it has been robust, and management expects this to continue for the foreseeable future because they continue to add value to this product. So it's not like they experienced a surge and now they experience a pullback like they mentioned in the PC market. They're not expecting that in this market. In this market, they're expecting continued robust growth. All right, the next question comes from Greg Moskowitz from Mizuho Securities, asking about the two different variables on cloud computing demand in the near to medium term, the economic pressures, and the spiking energy costs. And the CEO jumping in here to say that the macro environment will mean that everybody is going to optimize their build. In fact, as Amy said, our number one job for large swaths of our sort of customer facing organizations is to proactively help them optimize. And then from a customer perspective, the best way for them to align their spend with what is uncertain demand is to move to the cloud. And that makes sense, right? On cloud, a business's spending is more variable. It will depend on usage, it will depend on sales. And so when sales go up and usage goes up, then the expense of cloud computing will go up. Whereas if they keep that service in house, that's going to be a fixed expense that's going to stay the same regardless of where sales go up or down. And so that's when you have that feature, when you have the feature of added fixed expenses on a business, that increases risk because it increases the degree of operating leverage. And so as the macro environment worsens, you're going to see many businesses choose to convert to the cloud because that's going to lessen their degree of operating leverage and lessen the overall business risk, which you're beginning to experience. And the other side of the question is, yeah, it will save on energy costs too, but to some degree, it's going to be offset to the cloud-based segment, right? Because if energy costs are causing computing costs to increase, then that's going to cause whatever the provider is to experience higher costs, which then they will probably pass on to the users. So regardless of if you have in-house computing or outsourced computing, rising energy prices are probably going to increase computing costs. So you can't really offset much of that by going to the cloud, or maybe to some degree, but not so much so. You can't completely alleviate those costs. All right, and the final question I'll look at is from Brian Braceland from Piper Sandler, asking about the pivot to advertising. This was a segment that crossed over 10 billion in revenue earlier this year, and what is the broader Microsoft advertising ambitions for the next 3 to 5 years? And the CEO jumping in here to say, yes, our core advertising business has two elements to it. It's the LinkedIn business to business advertising where they clearly have a leadership position. And the second one is where they have their own and operated inventory. Overall active devices on Windows have grown by 20% over the pandemic, which has opened up some big opportunities for them with their inventory, whether it's through Bing, whether it's through search, whether it's the feed. And then with their partnership with Netflix to be their advertising partner, they're seeing another boost there with their third party ad platform. So those are the three areas: LinkedIn, their platform, and the search and feed, the third party ad network. And that continues to grow their business. And remember, advertising is a massive industry, right? 700 according to Group M, advertisers spent over $760 billion in 2021. That figure is expected to be higher in 2022, and more of that spending is going to digital channels like what Microsoft has to offer. So this is a nice tailwind for Microsoft stock investors. Of course, ad revenue also comes with higher profit margins. All right, so that's all I've got for this Q&A session in trying to understand what's going on with Microsoft stock. Thank you for watching, and I will see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.